Hey, thanks for tuning into the Land and Home Show. Today we're talking all about home buying programs to lower that out-of-pocket cost. Hi, I'm Stephen J.B. Davis, your land specialist and residential realtor here in Central Kentucky and beyond. With the spring approaching, we do have a lot of home buying programs that tend to cycle through our market. Now, this is going to mainly be a Kentucky-based thing. You may have different stuff in Texas or California or Oklahoma or whatever, but I don't work there. I don't know about those things or those places from a real estate standpoint. So mostly talking about Kentucky things, but we are going to start with some of the federal programs that have nothing to do with being a first-time home buyer, just so that you have a little bit of an understanding of distinguishing between these things and the options that may be available to you based on your personal financial situation. So we're going to start with FHA, VA, and USDA programs. These are all federal programs, meaning that if you live in any of the 50 United States, they're going to be available to you based on, again, your personal financial situation, your credit history, all that kind of thing. I grouped two of them together, and then one of them is a little bit different, but FHA and VA is what I'll start with. FHA loans are for anyone, whereas VA loans are for veterans only, and we're talking, of course, veterans that were honorably discharged. With FHA and VA loans, you're going to have a limit to the loan, not a limit to your income, okay? So that means the government will guarantee that loan up to a certain amount, but you're not going to be limited to how much money you or your household personally makes, all right? With the USDA loan, there are a lot more restrictions. Sometimes you'll hear this referred to as rural home loans or rural housing. And so there's a limit to the geography, meaning where that home is located that you want to buy, limit to the amount of money that you make as a household, and a limit to the actual loan, like how much the home costs. Those three loans are all government guaranteed by the federal government. They're not necessarily giving you the money, they're guaranteeing the money, which gets into lots of technical stuff that is linked below this video that you can read more about. But all three are options irrespective of how new you are. So you could have bought a home last year, or a home 5 years ago, or a home last month. If the home that you're buying is going to be your primary residence, you are eligible to use these three loans depending on, the general limits that I just described. Are you a veteran? Whatever. USDA loans are 0% down, again limited to geography. FHA loans are at least 3.5% down, and for those VA loans, you're going to be looking at no money down. Obviously, there's a lot of fine details there, but again, if you go below the video, you can read more about those three loan programs. So again, nothing to do with first-time home buying, just low-cost ways to borrow money for a home. And I wanted to start there because these are things that are available year-round. Now, if we shift into some of the first-time home buying things, we get into first-time home buying grants, and then we also get into first-time home buying loan programs, okay? So on the grant side, we're going to be talking grant and down payment assistance. Actually, we're going to be talking just Kentucky things. Again, if you live in another state, there may be similar programs, and that's wonderful, but I'm not talking about them because I don't live there. I don't know the ins and outs of how those things work. I just know the ins and outs about how things work here in Kentucky. So when you're talking about a first-time home buyer grant, what that's going to mean is that you get to have money for free in order to help pay for the purchase of a home. The string there is that you have to keep that home for 5 years for it to truly be a grant. So say you got a grant for $10,000 to go toward buying your home. What that means is if you moved out on the 4th year, you would owe $10,000 divided by 5 equals $2,000. So because you didn't stay that 5th year, you would owe that $2,000 upon selling this home that you got the grant for. Otherwise, if you stay 5 years or longer, that money, whatever it is that money you receive as your home buying grant, your first time home buying grant, you wouldn't have to pay that back. That's forgiven. It is not a loan, it is a true grant. So under the 5 years, you get to prorate the money that you got for the grant. Over 5 years, you're in the clear. It's 100% free. The strings for that also are that you have to be a first-time home buyer. Well, what does that mean? That means that you haven't bought a home for 3 years or more. So it doesn't mean that you've never bought a home. It's just a statute of limitations on how long it's been since you purchased a home. The pros are 5 years or more, you're in the clear. The cons to these are that space is limited. So, and only select people or lending institutions are eligible to even disperse these types of funds. So if you are looking for a first-time home buying grant, in Kentucky they're often called welcome home funds, or sometimes they're called the HOP funds. If you're looking for HOP funds, you can find that they work the same way, they just have different names. Ray Childs, who's been on my YouTube channel before, he has them through North Point Bank. They're an eligible lender to hand out these particular funds. And then also, if you are at a place where maybe those funds run out and you don't have that home picked out and you're just not like super ready to jump in and buy that house, which is typically what these funds are used for and how they work, just because they go so fast, like you gotta be super ready. So Ray has them at North Point Bank, and then also you can get them at Bank of England. I believe Ashley Smith still works there. I'll link her information below. But welcome home or HOP funds are that grant sort of structure, 3 years or less, 3 years or more since you've bought a home, and am I forgetting anything else? 5 years or more owning that home once you get the grant before it becomes a true grant. If it's anything under 5 years, you will owe some amount of a prorated amount in order to cover the amount that you won't be in the home anymore if you were to sell before the 5 years. Last but not least is down payment assistance. Down payment assistance is a loan program for first-time home buyers. With down payment assistance, you can receive up to $10,000 as a loan. I believe in 2023, that will be that $10,000 example. You pay it over 10 years, or really any example. You pay whatever the down payment assistance amount is over 10 years along with your mortgage at, I believe, a rate of 3.75%. Like that's your interest rate on that particular loan. That's given through Kentucky Housing Corporation. You have a purchase limit to receive these funds, I believe around $349,000, and that first-time homebuyer stipulation also applies too. So 3 years or more since you've purchased a home. And also, I think there are some income things that apply to down payment assistance. So when it comes to any of the first-time grants or down payment assistance, you're definitely going to have income stipulations. They're designed for low to moderate earners. It's to help make homes more affordable. We all know that prices have gone up pretty much in most places in the country, and so these programs are designed to make homes, if not more affordable, at least more affordable on the front end, so that you're coming out of your pocket with a little less money and can have some of that money, if you do have any money left over, to go towards other things. There may be repairs, or you may need to do some construction or remodeling, or whatever, you know, everyone's situation is different, but these first time programs are really designed for low to moderate income earners, and there will be stipulations as to how that money is borrowed, who can borrow that money, how much money they can make. And again, all of that information is at the bottom of this video in the description. If you have other questions, give me a call. I think that's all that I've got. I just want to update you on that because these funds do go fast. Not the first things I talked about. Again, FHA, VA, rural loans, those are available all year round. That's a federal thing. But if you're looking for first-time programs, they are limited. They go quickly. They are competitive. Not everybody has access as lending institutions to participate in them and give them out. So you do really have to be on the top of your game, get your pre-approval, have an idea of kind of exactly what you want. You can't really go around like, oh, we're not really sure what we want. We want to apply for the first-time program. Don't really have a house identified. It's really one of those things where you got to have all of your ducks in a row in order to best be able to apply and then win these types of opportunities. I think that is it now. I just wanted to clarify, and just keep your eyes open because I've got more videos almost every week. So thanks for watching. Adios.